What is going on YouTube, it's Sankey and we are back with another one. Alright guys, so in this drop I want to share with you the play that I picked up in the markets today and some plays on my watch list to get you guys prepped to continue winning in these markets as we move forward. But before I get the show on the road, if you'd like to help out the channel by hitting that like button, and if you're new, join the movement by hitting that subscribe. So I just had to come and circle back with you guys again tonight because there's a lot of things going on in the market, a lot of moving parts. There's a lot of noise going on because of earnings season. I know you're seeing some plays run up, some plays come down. So I want to cut through the noise and let you guys know what I'm looking at and what I picked up in the markets today. Help you guys better navigate these markets with me. So in this one, I've got a jam-packed one for you, so do make sure you stick this one all the way through with me. Now, before we head over to the play that I picked up in the markets today, let's run for a couple of plays on my watch list. So we are kicking off proceedings with no other than Alpine 4, ticker symbol ALPP, current standing $4.57. Guys, that momentum up today, up almost 30%, just what we're waiting for. And it shows that investor conviction and belief and backing is still in this play. Now they're on my watch list, and you guys know with these rockets, they have to stop to refuel before they make their next climb. So over the next couple of trading sessions, you might see this one dip down. If they dip into the threes, I'll consider adding to my position. Now, you know this one's got its floor around $2.50. As I gotta say to you guys, the best way to play Alpine 4 is to apply that buy-in momentum maneuver that I taught you guys. So those of you who picked this one up, whether it was $2.50, $3, $3.50, you guys were rewarded. Now, this still remains a big potential play. We know they've got acquisitions in the pipeline. We know there's that uplisting that's taking forever, which will give that stock price some momentum. So I just want to highlight this play to you guys. As I say, if you catch them on a cool off, ideally mid-freeze, low freeze, that's ideal. So the next play for your watch list, that's Bio Nano, ticker symbol BNGO, currently standing $7. Now this one's cooled off today after the momentum they showed in the previous trading sessions, and it's these kind of cool off movements you guys want to keep your eye on for opportunities to make entry before they make their climb. So that's why I want to put this one on your radar. Now with this play, I'm liking that NHS partnership they made, the rollout of that Sapphire product in the UK. It shows the quality of the play and its rollout potential. Now the thing you guys want to know is once these products start rolling out, they get more and more momentum and traction. So I'm expecting them to be moving into different European countries. So this sets this play up nicely for good success in the future if they can stick to their business mission. Now I say I'm looking for a cool off in that stock price into the sixes, ideally the mid sixes or below. Now we know this one had its floor just above $5, around $5.25. So mid sixes or below is looking like better entry on this play. The next one for your watch list, that's Drive Shack, ticker symbol DS, currently standing $3.40. Now this one has resurrected after it dropped below support and it's showing some good momentum now. I'm liking the way it's moving. Now this one's got its earnings coming up, and if they post up good numbers, which is what I'm expecting, this could act as a catalyst, give it the fuel it needs to break out. We know it's got that resistance around that mid threes, $3.50, $3.60 region. So if it can pass that, it'll head on to its way up to $4. I still have my price target on this one, end of year, of $5.50 on this play. Now onto the play that I picked up in the markets today, that's DraftKings, ticker symbol DKNG, currently standing $59. Now I'm liking where they're trading at the moment. Below that $60 mark is my buy zone, so they're ready to be picked up now. Now check this out, this one dropped below support of that $58, $59 mark, dropped down to $55 the other day. But they made that climb. When you see a stock drop below support but make its climb back up to support, resurrect, that's a strong indicator right there. So I want to make sure you guys know that, help you guys level up when it comes to the technicals. This remains a strong play going forward despite the slowness, the weakness we're seeing in that stock price. I don't want you guys to be fooled by that. This is a quality play. As I say, when you know the plays inside out, you understand what you're sitting on in your portfolios. It's only a matter of time before they make their climb, and they will make their climb. This is a play that's making their partnerships. They recently became a sponsor of the NFL, so that's good things. We know they've got their partnership with the UFC, WWE. I can list various others, which is all going to play in nicely to their year-end financials, which is expected to be over $1 billion for this play. So this is a strong play for the portfolio. As I say, ready to be picked up right now where they're standing at that $59 mark. Now, this one isn't getting as much love or interest from the investors right now, but you guys got to know there's other plays in the sector like a Caesars Entertainment, if you know them, or an MGM that are breaking out at the moment, pretty much trading very near their all-time high. So there's some good momentum in the space, in the sector, and this will feed into DraftKings. So it's only a matter of time before we see this play too break out. Let's talk about how we can level up as investors. So I want to talk to you guys about market overreaction. That was just yesterday. We saw Tesla post up good numbers. That stock price came down as expected. Now Pinterest, pretty much the same thing. Post up good numbers tonight, but in the after hours that stock is down. Now for my Pinterest holders, this should come as no surprise to you. Gave you guys the heads up. I said as we move through earnings season with this play, you should expect downwards volatility. It's a given. So here we have it. But you guys shouldn't be put off or phased by this, because what the investors are doing is they're cherry picking things from the earnings report and not thinking about the bigger picture, the longer term picture with this play. So as I say, they completely crushed earnings, revenues flying, earnings per share beating estimates. But the thing that they're focusing on is the fact they say they expect flat user growth in the US market. But we know this play is growing internationally. I told you about they're moving into Latin America, so it's not just the US they're focused on to build up their business. Even though they say flat, guys, check this out. See, I'm focused on the details. In the second quarter, Pinterest expects revenue to jump up 105%. 105% growth is solid growth numbers, guys. So that's nothing to be sniffed at. That is a strong earnings guidance moving forward. So this play is still a good play moving forward. What you guys need to do, just ignore the noise. That stock price will come down. Use an opportunity to buy into the play. Load up your existing position if you haven't already done so. When that play finds its floor, they will make their climb once the dust settles. This happens to several plays. As I say, it just happened to Tesla, happened to Pinterest, and it'll happen to a lot more plays as we move through the week. So if you've been rocking with the channel, you know what time it is. This question comes from Philip, says, double question today. Looking into the rest of 2021 and 2022, expecting inflation and perhaps even a market crash like in 2008, would it help the portfolio having a large portion of stocks with low PE ratios, or would they be hit just as bad as the rest of the market? Skills is coming out with earnings in 2 weeks. Should we wait on this before making another move on the stock, or should we jump at it at the current price below the $20 but above 18? It's great to see you're right. Each stock runs their own course and pops at different times. Each day contains a small surprise. So let's dive into this one. You are absolutely right, Philip. Each day in the stock market brings its own surprises, opportunities, and rewards. That's something to always remember about the markets. There's no boring day in the markets. Now, let's jump into your question. So you're saying, should you have a high amount of low PE ratio plays? Guys, I've run you through the PE ratios. You guys should be well up to speed on what that means in relation to these companies. But I say maximum have 10% of these types of plays in your portfolio if you wish to have the rest in the growth plays. The reason is I'm trying to get you guys to maximize the returns in your portfolios. Now, by investing into a Coca-Cola or a McDonald's, you guys aren't going to get those outsized returns that we're looking for that you get with our growth plays. Now, with the growth plays, the downside is you are going to go through way more volatility than those types of plays. But if you guys are able to just stay the course, ignore the noise in the market, you guys know I'm here to support you every single day on that. You will be victorious in these markets and you will get very good returns. You also mentioned if a crash happens, will these stocks be hit as bad? They are going to come down, but obviously not as much as your growth plays. Your growth plays are going to get hit far more than these low PE ratio plays, especially if they're defensible plays and they have low PE ratios. Defensible plays are those types of plays that are able to weather the corrections or weather the crashes more than other plays. So think of plays like a McDonald's, for example, or discount retailers that people will still use even in a market economic recession setting. Let's flip over to your next question. So you mentioned skills. In my last drop, I went through skills, told you guys the game plan and strategy, but once again, we are looking for call-offs in that stock price into the teens before adding to your position. So ideally, if you get them in the 17s, that's cool. 18s, that's okay. Once they start hitting the 19s, you can wait for that call-off back down to the 18s or the 17s. Now, they are coming up with their earnings. What you guys must know is Skills post out very good numbers in their last report. So I don't want you guys to ever get that twisted because of this slide down that you've seen in Skills over the last couple of weeks. That is due to short seller attacks, due to stock offerings and various other things. not related to their actual financials. Financials are coming in strong. I expect them to perform well. Skills has got a platform that is unique. I say user engagement is second to none, and that feeds nicely into good numbers. I'm expecting them to do well. This stock is already beaten down, guys. You got to remember that. You might still get that earnings volatility, but they're ready to go if you guys catch them in the teens now. And that, my family, wraps it up for this one. So if you'd like to help out the channel, do hit the like button. And if you're new, join the movement by hitting that subscribe. Now, to progress through the week, you guys know I am turning up the heat to ensure you guys continue winning with me in these markets. So I'll catch you on the next one.